Hello, this is Tom Cloud with this week's Precious Metals Market Update. I'm going to get right to the Brexit. As we talked about it last week, we didn't think it would happen. We knew there was a good chance as it went along, but of course the exit happened, and we saw gold soar 60-something dollars on Friday and then another 15 on Monday before we got a dip this morning on Tuesday, June 28th, as I record this. But what the important thing is here is not that the powers that be cannot go back down after it's gone up. The world has changed. For the remainder of your lifetime, the world has changed. And what I mean by that is people are wanting to get back to freedom. As you look at the exit polls in England as to why they did it, everybody talks about the overregulation of the EU in Brussels. Everybody talks about the lack of having their own country just taking up everything from other countries. And all of a sudden, the freedom situation is what rang loud as we saw letters coming out from the Yorkshire mayor and other people trying to explain to the world why England was willing to let their currency go down and have a few bad years to have the freedom and get rid of the regulatory stuff that's going on in the EU. We now see that 6 other countries want to follow. We know that Italy, we know that Portugal, we know that the Slavic nations, we know that there are a lot of other countries that are going to vote on this over the next couple of years, and the probability is there'll be more than just England that will leave the EU. This is going to put a pressure on gold like you have never seen. As I sit and talk to you this minute, we're already backlogged on COMEX gold bars at the Royal Canadian Mint right this minute, and we've seen nothing. If you were an English investor last week and you came out, you're up over 25% in 3 days in your currency. We're up about 6% in gold in US dollars, but the dollar's been going up. But if you lived in England, like I said, you're up 25% just in 3 days of trading on gold in your currency. So we're going to see more and more as people move to safe havens. But the main thing you've got to watch is world stock markets. How in the world you could sit there and just leave your money sitting there? Most people can't afford to make mistakes they made in 2008. It's taken 9 years, 8 years to get back to where the stock market was in 2008. And some people say, oh, my stocks have come up double. Yeah, they lost 50%. They came back up 100%. They're back even. So what you've got to do is be very selective and be sure you've got someone you really trust, because the odds are you may never have another chance to recoup depending on how old you are. But it is the issue. I can't afford to take that kind of risk at my age and my place. So I'm going to move to safety. I'm going to be in gold, I'm going to be in bonds, and I'm going to be in real assets. That's where the bulk of my assets are going to be. I'm not willing to play that thing except for selected stocks that I know something about, but not just the general market, because I believe with my heart all markets worldwide are going a lot lower, and especially as this people talk about exiting the EU. And then we'll be like a broken record. I want to say one more time, the biggest event hasn't happened yet, and that is the special drawing rights that China will receive on October 1st, and their disclosure of how much gold they have sometime between now and the middle of September. They'll come out. And at that point, you could see gold get backpiled if there's any doubt that we have 8,163 tons of gold in Fort Knox. There'll be a lot of speculation going on. And also, just to give you an update on the Beijing exchanges in China, the demand from the public is unbelievable. Central bank demand is unbelievable. And believe it or not, we're actually seeing more shortage in gold than we are in silver right now, because silver, once again, is an industrial metal, and all this exit stuff has sparked talk of possible recessions and having to start another QE, not only in the US, but other parts of the world. So silver has not prospered like gold in the past week because it looks bad for the world economy. And silver is more dependent on a growing economy. So what we've seen is mostly gold purchased, and it has been the one to reap the most benefit. So is it too late to buy now? No. You just want to keep buying steadily as you can afford it this year and next year, both gold and silver. And we're going to keep watching and keeping up on whether there's going to be an exit or not of other countries as we move forward. So hopefully next week I'll be able to bring a little more light to Brexit after it's been 2 weeks after the exit. And we'll also have an update for you on where the supply chain stands. Until next week, this is Tom Cloud signing out.